So if you're a gold investor, then this video is for you. All right. So let's directly dig into the topic. Uh, this is the chart of 10 years bond yield, all right, versus the price of gold, the real yields actually. This is adjusted to inflation. All right. So if you look at this chart, there's two things very unique which you will find right now happening right now is, see, if you look into this yield, whenever the real yields go down, the gold performs, and vice versa. All right. Gold underperforms when the yields are high. It's very logical as the money starts flowing towards the bonds, towards the treasury when the yields are high. All right, but this time what you're seeing is, right now, if you look, the yields, I mean the interest rate in USA has come down from 5.5% to 3.75%. Even then, your real yields are not going down; they are staying elevated. And the second very unique thing that's happening is the gold is rallying even though the yields are high. I mean, this has never happened. This is something new, and the reason why this is happening is because the USA is sitting with 39 trillions in debt, and that debt is making the bond investors, like, spectacle, and that's why they are asking for more premium, more return over the bond holdings, because they're taking more risk. uh, and the second thing is, interest rates are falling as well. Interest rate is in the downtrend, and like, if we are expecting right now, the market is expecting the inflation to go down, or just like continue this, the inflation to stay down for the coming time. And that is why the interest rate cut expectation is there in near future. The market is factored in right now, and that is why the gold is rallying. All right, although we saw a little pullback due to this Iran and US war, the crude price going up, and that inflation can come in, the stagflation can come in, the rate hikes can happen, and that's why we saw a little pullback in gold and stocks and all the things, all the various asset classes. But right now things are looking good. At the same time, we're seeing the dollar getting weaker. Dollar. Why the hell is the dollar getting weaker? Because this trend in this world of de-dollarization, the people are not trusting the dollar anymore because of this US debt sitting so much, and at the same time, the federal bank is buying their own bonds, the government bonds, as they lack the buyers. So they are buying their own bonds to support the government, and that's why the money printing is massive right now in the US, and that is another reason why your dollar is getting weaker. And obviously, when the yields are when the interest rate cycle is in the downtrend, your currency falls, right? So these are the reasons why our dollar, I mean, whoever's dollar is also getting weaker. All right. So yeah, this is what you have to keep in mind when there is rate cut expectation in US, and the de-dollarization will continue. Everybody knows that, because there's no just, I mean, there's no bounce back for this massive debt. All right. So the long-term trend of gold is very nicely positive. Although we might see a little pullback if the rate hike cycle starts again. All right, or the fear of inflation comes into the picture, then we might see some pullback in gold as well as stocks. So this is what you have to keep in mind. If you're a long-term holder, let's say for 2 years from now, very nice. You can hold it. I mean, gold has to rally, man. De-dollarization is this trend which cannot stop until the USA stop. Stop the dot and their, like, the debt pile up. They're taking a lot of debt. So yeah, this is all. If you have a long-term investor, you have to keep your money in gold for 2 years. Don't worry about it. Gold can go down at max from here, like 10% at max, and I mean, that's all, man. Just stay invested in gold. It's all nice picture.